If your stock portfolio is like mine, it has been crashing pretty hard over the last couple weeks. Today, the S&P 500 is down almost 3%, and we're down almost 9% from the highs we hit back in February. So what's going on? Is this the beginning of a market crash? Should we be selling our positions and wait for the bottom to hit? Or is this just a short-term correction? And why is the market dropping so rapidly like it has over the past month? And it seems to be intensifying. Well, I'm going to talk about all these things in this video, so stick around. This is an exciting video. Stick around to the very end because I'm going to tell you about my plan going forward, whether this is a long-term situation or if this is a short-term situation. I've got a plan in place for both of those things if they are to happen. So stick around. Also, like and subscribe to the channel if you are into stock market info. If you like to hear about new companies that might be poised for big moves over the next few months, we talk about that on this channel. I go over my personal portfolio, the stocks I'm buying every month, stuff like that. So like, subscribe, stick around, and comment, and let's get into it. All right, y'all, so let's get right into it. Stock market today, the Dow sinks 900 points, NASDAQ down 4%, worst day since 2022. And we all know 2022 was the last stock crash we had. So what's going on? What's causing this? Down below it says U.S. stocks plunged on Monday as investors process growing concerns about the health of the U.S. economy after President Trump and his top economic officials acknowledged the possibility of a potential rough patch. The Dow Jones Industrial Average fell nearly 900 points, and the S&P dropped around 2.7 after the index posted its worst week since September. So what's going on here? Basically, a lot of the consumer sentiment is down. The fear around what Trump's tariffs will do to our economy and our trade is weighing on people, and they are worried that this could affect, maybe a recession, or this could be the beginning of a big crash because, all these tariffs are now going to be pushed on to the buyers here in the U.S. And what kind of concerns that's going to arise around the high cost of produce and eggs and cars and basically everything, and how that's going to make prices go up. After the past few months, a lot of people were speculating that the Trump administration would lower a lot of these prices within his first couple months in office, or at least that's what the president and his team ran on during the election. So is this something we should be afraid of? Well, a lot of things could happen here. Like I talked about in the intro, this could be a quick correction. President Trump could come out tomorrow on the news and say, you know what, guys, us, China, Canada, Mexico, we all came to an agreement, and we're all going to work together to bring prices down for everybody. We're not doing the tariffs. And, on that news, the market could run, another 5 or 6% and start running back up to all-time highs. Or, Trump could keep doubling down here, and we could see a rough, period over the next year or so as tariffs and all those things take effect. And, maybe, over the long term, the Trump administration's plan is that the tariffs over the long term will work out better for the U.S. economy. But they've acknowledged that if that is the case, there are going to be some hard months ahead. So what's the difference between a market correction and a market crash? It's pretty standard. There's not like a set in stone, but basically the commonly accepted definition of a correction is a drop of more than 10%, but less than 20%, and a crash is a decline of 20% or more. Basically, a stock market crash and a bear market usually are the same thing. Sometimes some people will say a crash is a bear market that happens over a quicker period of time than maybe a long-term decline of 20% or more. But basically, a crash is once we hit 20% or more from the all-time highs, and a correction is usually between 10 and 20. So right now, the S&P is just under 9% today from all-time highs back in February. So, I mean, by this definition, we haven't even fully gotten into correction territory yet, but we're close. In my opinion, close enough to call this a correction. And so do we know? I mean, the big question is this just a correction or is it a crash? And the answer is no one knows. No one will know. Anyone that's telling you they know for sure has a 50% chance of being right, and they have a 100% chance of most people forgetting this over the next year. So, a lot of people come out and they'll tell you exactly what they think is going to happen, but no one really knows, guys. No one knows what for sure is going to happen, and that's why no matter what happens, we are looking for great companies trading for great prices in the stock market. If you're a stock market investor and you buy individual companies, I'm buying at the top of the stock market when it's at all-time highs, and I'm buying when it's at all-time lows because I'm looking for companies that are trading at a great price. Now, will those companies trade at better prices if we hit a stock market crash? Yes, but that doesn't matter to me. I'm not looking at the next year. I'm looking at years out from now. I'm buying companies like NVIDIA under a 50 PE, and by the way, it's trading under a 40 at this point today, and I will be buying more NVIDIA on Friday. But that's what we're looking for. We're not worried about the next year in the stock market. It could crash, 50%, and I will still be buying more shares of stocks that I think will do well over the next decade. And I will sell those shares, as they reach overvalued price targets. Now, I might not sell out of all of them, but I will sell a portion. But when stocks are at all-time lows, and if that company is trading at a undervalued stock price and it's a great company, I'll be buying. I'm looking for companies that have great balance sheets, that have plenty of cash on hand and that low debt in reference to the total amount of assets or cash on hand they have. I'm looking for companies that have those strong balance sheets. So if we do go through a recession, if we go through a really difficult economic period, those companies, even if they lose revenue over a couple year period and their growth rate slows down or even goes into negative territory, these companies will still make it to when the economy bounces back and those prices will jump and we'll hit all-time highs. When you look at companies like Amazon or Netflix over the past 10 to 20 years, during those stock crashes, those companies have done very well over the few years after that crash. And so that's what we're doing as investors is we're not afraid of what's going on in the economy. We're looking for good companies at good prices. So right here, I've got Robinhood pulled up, and I've got the max chart on the S&P 500 pulled up. This thing goes all the way back to January of 2000, so 25 years here. And you can see this first crash right here, this was a crash. This was the dot-com bubble crash, and we just hit new all-time highs just barely at the end of 2007, and then we had the great financial crisis that happened, and this was a crash in 08 and into 09, and then we had a slow recovery here. Now, these two crashes next to each other, they called this the lost decade. This was the second, basically, when we had one crash and then we just hit all-time highs and had another crash. We had one more lost decade. I think it was during the 50s or 60s. I'll have to look at that. But we've had two lost decades over the last 100 years, and this was the most recent one. But if you were buying down here, prices came back up to all-time highs, and then if you bought again down here, believe me, they came back. And then we had here in 2020, this was the COVID-19 crash. This was a crash, but it was extremely short. It was probably the easiest stock market crash of all time. And right here, this was the 2022 crash. This was caused a lot by inflation, but also, the Russia-Ukraine war had a lot to do with this, supply chain issues, stuff like that. So this was the 2022 crash, and right up here we see all-time highs, and this little blip here is where we are right now. So I've got Netflix's 5-year chart pulled up. This is the same chart we were looking at SPY, the 5-year, except this is Netflix. You can see right here towards the end of 2021, we were at all-time highs, and the 2022 crashed, and we went all the way down to $175 a share. That was a huge drop from 690. So, I mean, this is what happens if you have that mindset of, well, I want to wait for the market to get into a safe place before I start buying. You're going to mess up every time, because it really comes down to what's a good undervalued price for Netflix. And when these crashes start happening, those prices hit, that's when you want to be buying. So let's check out Netflix back then. This is we're on macro trends, and this is, we have the stock price up here. This is what we were just looking at. This was the height here at the end of 2021, and here's the low. And this bottom chart down here is the PE ratio for Netflix over the same period. So obviously we saw some lows. We hit a low of 16 here back in 2011. We hit a low here of 78, almost just under 79 in 2014. Obviously Netflix had some, we were having some huge PE ratios here, and as the stock price went up here, the PE ratio started to level out. And you'll see this with a lot of companies, that the first few years of profitability, their PE ratio takes some time to level out. And that's what we were seeing with Netflix. Now, so it dropped down, it got down below 100. You'll hear me talk about I like under 50. So at the height up here, we were right around a 50 PE. So as this thing started dropping, okay, obviously we somewhere around March of 2022, it is the middle point here. Let's just say we were around March, we started buying because we got under a 50 PE, and we started buying this thing that March. Okay, it's right around here. So let's say we started buying right around this point, and we kept buying all the way down through here, and we had an average somewhere in between. So let's say our average was, $280 a share. Well, if you kept buying all through then, and we bought all the way through here, then over the next 3 years, we got all the way up over $1,000 a share. So we had like a 3x, over a 3x, 3.5x on our money over, a 2 to 3 year, about 3 year period there. So that is huge returns. And the people that were back here saying, well, Netflix is dropping, the stock market's dropping, so I don't feel good about buying, I want to wait for something to happen. They're going to wait until it's too late. They're always going to wait until, these are the kind of people that only like to buy stocks when they're at all-time highs. And look what happens if you buy a stock at an all-time high before the market crashes. All right. If you have a market crash and you're buying at all-time highs, you lost about, 75% of your money over the course of a year. That's why we wait for the companies we like to get into undervalued territory. And that's why during a crash, we buy up as much as possible, because this is where we really start to make money. So what does that mean for me? Obviously, that I'm going to be a buyer at the top, at the bottom, and all the way through. I'm not worried about what's going to happen, over the next few months. I'm looking for that 10 years out, 5 years out. I'm looking for a few years down the road. That's where I plan to make my money. So I'm looking for those good deals. And when market crashes happen, some of those stocks that, like we were looking at Netflix, that trade really expensive, that, especially for people like me, it's hard for me to pay a 60 to 70 PE for a stock I'm buying. I want it to get below that 50. So a lot of stocks like that I was waiting for. For instance, Nvidia, I've been waiting for a while to drop under a 50, and now we're at around a 38. So I'm really excited about that. And even if it drops down, all the way, gets cut in half to $60 a share, I'll still be buying. And the difference is no matter what happens, I invest 25% of my pre-taxed income. I buy stocks every single Friday, and every time I get a paycheck, 25% of the pre-taxed, paycheck goes into my trading platform, into my investment portfolio, and I buy stocks. Now, if we do see a stock market crash, if the S&P 500 drops below 20% from its all-time highs, the only difference I'll have is, I'll keep investing 25% of my pre-tax income, but here's what I'll do differently. In 2025, I was planning on buying a new daily vehicle. I was planning on getting a new car, and I was planning on paying cash for it. But if over the next few months we see the stock market drop and we actually get into a stock market crash, I'm probably going to push that off to 2026, and I'll probably take half of the money I was going to spend on a new car and invest it into the market, because we don't get these opportunities very often. Obviously, we had one in 2022, and we had a really short one in 2020 with the COVID crash, but generally these stock market crashes only happen once every 8 to 10 years or so. So when they do happen, that's the time to maybe say, well, maybe this year, let's use that money we were going to spend on the vacation, put it into our retirement portfolio so you can make lots of money off that money, and maybe push out that vacation for next year, because believe me, 20 years down the road, you will be thanking yourself for sacrificing that one vacation, or maybe keeping your old car 1 year longer to maximize that retirement account. So, but guys, that's basically what I'll be doing. If it's just a correction, I'm buying on Friday. If you told me that the stock market was going to continue to crash over the next year, I'm still buying on Friday, because, Nvidia might level out at a 35 PE. We don't know. I don't know what companies are going to do. Most likely, as the market crashes, companies will crash with it, but we have no idea where the bottom will be. We have no idea when it's going to correct and how fast it will correct. So for me, I'm buying every week. As long as I have a paycheck coming through, I'm finding great companies to buy, and I'm buying them at great prices no matter what the stock market is doing. If you want to learn more about how to find a good price for a company, please like and subscribe to the channel. And we go over stocks I'm buying every month, stocks that I like, that are getting into undervalued range. Those are the ones that I'm looking at to buy. And, if they continue to drop well under that, I keep picking up shares. Anyways, that's it for me. Short video on what's going on in the stock market right now. A lot of fear out there, but believe me, guys, fear is the time to pick up shares of the companies you like. Fear is the time when the weak are standing on the sidelines and the strong are putting their money where their mouth is. And that's what I'm doing. That's what I hope you're doing. And if you're not doing it, figure out a way to get that going and build up your portfolio. And I wish you all the most success over the next few years, whether this is a correction or a crash happening. If you keep doing that, you'll be successful over the long term. Y'all have a great one, and I'll catch you on the next video.